Hey guys, Jonathan Wells here, back with another video. Wanted to actually do an article comparison with you guys today, showing you one article from Housing Wire saying that we're going to see a 16% increase in home price appreciation next year. And I also have another article by CNBC showing that the home price appreciation is actually slowing down and that we should be worried and concerned about where home prices go in the future. So I'm going to compare these two articles here and give you guys some extra data as well, let you make the decision for yourself, and give you guys my insights. So if that sounds good to you guys, go ahead and give me a like. Also give me a subscribe too, turn notifications on, and give me a comment down below, as all of that stuff really helps grow the channel and is going to obviously help me with giving you guys more content to look at as well. And guys, make sure you stay around till the end of the video. I'm going to give you my personal take as a mortgage loan originator on where I think the housing market's going to be by the end of next year, and if we are seeing a crash come anytime soon. So with that all being said, guys, let's go ahead and get into the video. As always, I'm going to link every article down below that I use. That way you guys can look at my sources and make sure you guys fact check that information as well. Okay, so in this Housing Wire article, Goldman Sachs actually says that home price appreciation will rise another 16% in 2022. They're currently up about 20% year over year right now. Goldman Sachs economists predict that home prices will grow by another 16% in the end of 2022. And they actually contribute the rapid increase in home prices to a number of factors, including low interest rates, tight housing inventory, and millennials entering the home buying market. Also, they do consider inflation too, as a lot of investors are trying to purchase hard assets to combat inflation. Now, in this article, Housing Wire also states that new construction is going to be backed up as well, considering that they are over 200,000 jobs below their February 2020 level. And that's according to the Bureau of Labor Statistics. Now, one of the only shimmering lights here when it comes to getting new inventory on the market is going to be certain areas relaxing their zoning laws. Now, one state that's attempting to do this is actually California, but it's proving to be quite difficult politically to get this done. And also, according to Yahoo Finance, because of all these different factors that we're seeing right now, they're estimating a tighter housing market over the upcoming months as well. Now, we're actually going to bring another article on here from CNBC's Diana Olick. Now, she's been covering housing for the better part of probably 10 or 12 years, and she's been very bearish on housing for a long time. Now, this last week, we recently got a report on signed contracts for the month of September. Now, the reason why this is super important is because existing inventory makes up about 85% of the total housing market. And so signed contracts means that you have these amount of prospective buyers that are going to be moving into these many new homes. So it's not a perfect measurement, but it's one of the best measurements we have to show how many new homes will be closing in the next couple of months. Pending home sales fell unexpectedly in September, likely due to higher mortgage rates. And so they go on to say here that existing homes fell an unexpected 2.3% in September compared to August, according to the National Association of Realtors. Analysts were predicting a slight monthly gain, but sales were 8% lower compared with September of 2020. So guys, not only are sales down 2.3% month to month from August to September, but they're actually down 8% on a year-over-year basis. Now, Diana contributes some of this to the rise in mortgage rates that we've seen recently, which is also due to inflation, but she also pins it on the fact that homes have gone up by about 20% year over year, and that housing is now unaffordable for most people. Now, she rounds out her article by making the assumption that since we have less homes under contract, they're showing signs of a calmer home price trend as the market's returning to their pre-pandemic activity. Now guys, before you put on your tin hats, I want to make sure you guys have the right information here to make a well-rounded decision. A recent article by the National Mortgage News actually came out quoting realtor.com saying that home inventory has been down 25% since last year. And guys, that would actually explain why we don't have as many homes under contract right now. Not because no one's out looking for homes, but because homes are so few and far between, nobody can get one under contract. And obviously, in order for us to have product sales, we have to have inventory or products to actually sell. So in most markets, you still have inventory at super low levels, especially compared to pre-pandemic activity. Now, in reality, what does this actually mean for the housing market as a whole, and what am I giving my clients information on right now? And guys, my advice to you would be, one, you need to find a trusted real estate professional in your market. That way you can get all the insider information on what your particular market's doing and how it compares to others in the national average. The second thing that I advise my clients to do is go ahead and look now. If you're going to be looking at any time in the next 12 months, you may as well start your search now, because typically this time of year you can get a better deal, especially where I'm from in the Midwest when nobody wants to move during the winter. Also, mortgage rates are being forecasted to go up to potentially 4% by the end of next year. And so if you want to lock in a lower house payment, now is definitely the time to search. In addition to making sure you get that 16% gain in equity on your home versus what you're actually paying in addition to the seller when you end up purchasing next year. So guys, I'm very bullish on housing. I think we're still going to see an incredible run over the next 3 to 5 years. If you guys have any other questions, please put them down below. I really like doing this where I compare different articles and give you guys my insights on where the current housing market is. Thank you guys so much for watching. Please subscribe, please like this video, and I'll see you in the next one.